back. You're watching the CNBC TV18 coverage of the budget 2024, and we are decoding the fine print with the budget makers themselves. Joining us now is the Economic Affairs Secretary, Mr. Ajay Seth, also the DFS Secretary, Mr. Joshi. Thank you very much, gentlemen, for joining us here on the program. Let me start with you, Mr. Seth. As far as the economy is concerned, with the growth assumptions that have been made at this point in time, lower than what other external agencies, including the multilateral agencies, are expecting, how confident do you feel in being able to get to the upper end of the growth target, in fact, better it?
See, the budget assumes a nominal growth of about 10.5%. What the agencies, different agencies have, external agencies have estimated is of the order of about 7%. RBI has estimated about 7.2%. Economic survey assumes 6.5 to 7%, but that as a constant prices. Here what we are talking about a nominal growth rate. Now we feel that we have been a bit conservative, but not excessively conservative, and 10.5 is a reasonable number.
A reasonable number. Some of the measures that the government has taken in the budget now to stimulate growth further, both on the investment side as well as the consumption side. To your mind, I mean, we've got reactions coming in from industry who see it differently, but to your mind, which are the measures announced by the budget where you believe we are likely to see action within this financial year, the impact of that being seen within this financial year itself?
So there are few measures which should start having the impact immediately. For example, any new entrant to the job market through EPFO, the formal job market, there is a support. Now, that from the day scheme gets formalized and gets announced, it will start happening from that side itself. So I see the first impact coming it on the employment itself. The second order which is coming up, like there is an income tax relief.
Yes.
Now, that is income tax relief in that people will have a little more money in their hands. But what do they do?
Could more have been done? And I will ask the CBDT that question as well. But the expectation is that perhaps a little bit more could have been done. Was it the revenue implications that held back the government?
No, I'm not getting into the what could have been done. I'm here to say that what went into deciding the budget and what the contours of the budget are. Your question being that where do we see that growth stimulus? What we are growing at 6.5 to 7%. What the budget tries to do is to take the potential of the economy to a higher level. There are a number of reforms measures are there. With that, those reforms doesn't happen overnight. So the idea is take the potential from 7 to 7.5 and then beyond that. So this is what the focus of the budget is. More on employment, which is more immediate.
Yes.
Skilling for the youth, which is more medium to long term. Then increasing the potential of the economy.
I'll talk about those next generation reforms that the finance minister spoke about, but let's also address, Mr. Joshi, the announcements that came in pertaining to the MSME sector, 8 measures specifically for the MSME sector that the finance minister highlighted. Now, when do you hope that these measures will be operationalized, and what kind of guardrails do you believe will need to be put in place to ensure not just effectiveness, but also from the banking perspective, there is no concern, especially when we talk about SMA accounts?
So, about the timelines, we have already started working on this credit guarantee scheme announced by Honorable FM in this budget. And the new assessment models for MSME credit will be developed, which will be based mainly on the digital footprints of the borrower, rather than just concentrating on their balance sheet and income tax returns. We will also see their things like payment of their bills, payment of the salaries, etc. So all these things will take, some time, but not long term. Maybe in next 3 months, all these things will be materialized. And regarding increase in mudra,
from 10 to 20 lakhs.
10 to 20 lakh can be done immediately. So all of these are very, very short term. Maybe I am seeing the time horizon of 1 month to 3 months.
Okay, so within a quarter you believe that this should be operationalized. But conversations would have obviously happened with the RBI to put this scheme and the framework of this scheme forward. The checks and balances that you believe are needed, and also this is for unsecured and secured loans or only secured loans?
So these are for all type of loans, because the MSMEs currently face problems as soon as their accounts are declared as SMA categories. In order to give them give them comfort to the lenders also, one kind of a fund, guarantee fund, something on the lines of ECGLS maybe will be created.
Okay.
And that will help us in giving
so this is for the plant and machinery loans, etc., which is a self-financing scheme, I'm given to understand. So the government is not going to be subsidizing this.
That is for the manufacturing sector.
Right.
But the thing which I called about SMA and NPA loan accounts, that will be support will be given by the
government, which will be a credit guarantee scheme that will be put in place. Let's talk about the next generation reforms, which was priority number 9 that the finance minister articulated. And a lot of that focuses on the center and the states working together, whether it is land and other factor market reforms that you speak of. These are all going to be work in progress, and of course no timelines were set. But what can we realistically expect in terms of next steps to move forward on some of these aspects?
Let's pick it up, given a limited time, so land-related reforms, both on the rural lands and the urban land. Just take that example of next 3 years, getting the farmer registry and the land registry is getting combined. It's a 3-year time horizon. Similar manner, on the land-related actions, be it for the rural and the urban, getting it done in next 2 to 3 years, incentivizing states, working with the states. Some states have done fairly large. For example, if we talk about, some states have done their cadastral maps digitized, GIS referenced, and done as per current ownership. Some are at the stage of 30–40%. So making everybody move to that direction. So the idea is that make the land market more efficient, make the land availability more efficient, make the land usage
more efficient,
more economical, because land is a limited country. We are a large country with a large population, so per capita availability of the land is a very, very limited one. So that is something wherein better utilization of land in rural area and in urban areas, that is what the focus is.
Sir, let me ask you about a concern that's been raised by the regulator and was kind of alluded to as well by the economic survey. And this has to do for the fight for deposits and the fight that the banks have to now undertake. And the RBI governor basically saying that, look, you need to devise your strategies in a new way to be able to go after deposits. How are you at North Block reading this at this point in time? Are you concerned as well?
With regard to the CASA, there is certainly a downward trend in terms of CASA in the banking sector, but still, is something which is like we must be addressing and thinking about. But I think CASA is, if I remember correctly, is more than 40%. Which is sufficient actually if you look at the other countries' experiences. But yes, there is a concern.
There is a concern. Would you like to elaborate on that as well, about the concern that seems to be emanating from the regulators, especially on this participation, not just in the equity markets in general, but particularly on the F&O side?
Yeah. I see it as a concern that if the credit is growing at a much larger pace than the deposit, that requires a rebalancing. And yes, as an economy, we require more credit, we require more investment. So that's a concern. Getting the credit growth rate and deposit growth rate, which are more balanced, that's a concern. But you use the word fight. That's not the way I see it. It is a competition. It's a market-based competition. So the people.
So you're saying banks will need to do more to compete.
Competition. They have to compete with other service providers who are looking for savings. So they have to be paid. Any competition it can be fought either or not fought. A competition has to be won either on pricing or on better services or on combination of both. So it is for different asset classes. So more competition is always welcome.
More competition is certainly the order of the day. Mr. Seth, I also wanted to talk to you about what the finance minister mentioned in her speech with regards to drawing in more foreign direct investment. She didn't specify what measures the government is planning to take. Could you elaborate for us what the thinking is at this point in time in terms of any specific pain points that need to be addressed to draw in more FDI? And specifically, I know she clarified that the government is not distancing itself from the survey's view on attracting FDI from China, but do you believe that that is a pragmatic approach to have at this point in time?
first attempt to the first part which you have said, that an announcement which was done, that the simplification of rules and regulations. I'll give you just two examples.
Please.
There are several on the table which are being discussed. One, that there are cases wherein a company from India goes abroad, does the business well, has set it up, has become bigger than the Indian entity itself, wants to come back and invest into India.
Yeah.
Now, that is an investment, we should be welcoming it. But the present set of regulations are not very smooth about that money coming in. And this is our legitimate surpluses earned overseas to be brought in as an FDI into the country. So that is one piece. The second piece which comes in is that at the moment, as we know, that FPI limit is 10%. What if somebody were to cross 10, then that entity is told, hey, you have to disinvest, and some days are given. What if somebody were to say that, no, I want to get into an FDI, give me a regime.
Yeah.
With whatever approval processes are there.
Okay.
That is another piece. Our rules do not provide for it.
So are you working on that?
Yeah, that's correct.
So liberalizing the FPI regime?
Not FPI, meaning that the moment it crosses 10%, then the investor has an option either to roll it back or say that reaching up to 9.5, saying that I want to cross 10%, then it has to go through the approval process. We have to put that mechanism in place, an efficient process in place. And so that is the second aspect. Coming to the other question of that FDI, what the economic survey has thrown up a question, that where do we see investment versus the trade account? And that is an economic survey. It has expressed a view. The idea is to generate a debate and arrive at a decision at this point of time. So it's not that as a government has taken any decision. This is it has generated a debate. And then we have to look at those matters.
Well, speaking of a debate and a discussion, I think, unequivocally, 2 thumbs up coming in from the VC community, from the startup ecosystem, because that vexed angel tax issue has been addressed. It's been abolished. This has been a long-standing demand. One of the other concerns, and of course, parity now, even as far as capital gains is concerned, at 12.5%. So that's the other piece of good news. But one of the other concerns, since you talked about, bringing in surplus capital back into India, is this business of reverse flipping of companies looking to move back to India, to list in India, and the tax implications on account of that. Is there any thinking on that front at this point in time to try and address that?
See, that demand has been there, that expectations have been there, and that is under consideration. What is the best way of addressing those concerns to get those companies come back to the India because they see certain advantages coming up? That is a work in the making. As and when the decision gets taken, it will get announced.
So credit growth, on the back of the many measures that have been announced, the growth stimulating measures that have been announced, what do you expect credit growth to look like, in the second half of the year?
So credit growth currently is around 15%. I think in the second half also it will remain in the same region. The deposit growth rate is around 12%. So that is the gap probably Secretary DA was talking about. I presume for the next half, it will remain the same.
Let me get both of you to comment on the interest rate trajectory, both globally as well as domestically. And Mr. Seth, let me start by asking you, the expectation now is that we are seeing a more controlled inflation environment, both globally and of course in India, we've said that inflation is well under control. Domestic rates as well as global rates, what's the expectation?
See, today we are discussing the fiscal policy statement, the budget.
Yes.
Today is not the forum, and certainly not from Department of Economic Affairs. We discuss monetary policy. That is the remit of the RBI.
Can I extend this to what the survey has suggested, that food inflation should be kept out as far as the inflation framework is concerned? Is that up for debate in any form or fashion?
See, that debate is not just in India, even overseas, and there have been a conversation even in the International Monetary Fund as well, that inflation targeting globally, what should be the benchmark? So that is a more academic work, more research work is there, and economic survey also does talk about some of that work.
So as far as banks are concerned, sir, I know you'll probably give me the same answer on interest rates, so I'll pass that question. But bank privatization, any effort, any move towards that?
Bank privatization, IDBI is already under consideration. and the others are the previous budget announcements. This budget doesn't talk about any bank privatization.
No, it doesn't. But are we still? Is that window still open, or?
I think I'll stop here only.
You will stop here. You're closing that window on me, Mr. Joshi and Mr. Seth. Always a pleasure. Appreciate you joining us here today, and we look forward to more conversations with you on the CNBC TV18 budget verdict. Appreciate your time. The budget makers here on CNBC TV18 live and exclusive, decoding the budget fine print, its impact and its implications for the economy. More coming up. We're back with the CBDT and CBIC chiefs. Don't go anywhere. Back in a moment.
Thank you.